Hey, what's up guys? Welcome back to my channel. So in this video, I'm going to share with you guys my personal opinion on why I choose not to pay off my student loan debt and instead invest my extra cash flow into cryptocurrency, especially Bitcoin. Now, I know before we get started, a lot of people out there, a lot of financial advisors definitely tell you guys you should pay off your credit cards, your student loan debt first. And I definitely know the reasoning for that. So in this video, I'm just sharing you guys my opinion. At the end of the day, you guys can do whatever you want. This is not financial advice, so definitely take my opinion with a grain of salt. Because I've been in the cryptocurrency space, into Bitcoin for more than 3 years now. So I've even seen an 85% drop. So even in this coming bull market, a 30% drop is very common for me. I can stomach these kind of drops. So for any of you guys that are very, very new to this space, definitely take my advice with a grain of salt and do your own research. Now, before we get started, I would definitely appreciate it if you guys give me a thumbs up below and subscribe to my channel. Again, I guess I would call myself a contrarian investor because I invest into cryptocurrencies. I guess I would be a macro/contrarian investors. But anyway, guys, I'm trying to really hit partnership. I'm almost there. So definitely subscribe to my channel if you haven't already. I make videos on cryptocurrencies and hopefully retiring one day and just moving on to my next phase of my life. Let's get started, guys. So in this screen right here, let's just quickly read this. Basic rule of inflation is that it causes the value of the currency to decline over time. That makes sense. As they print more money, value of money declines, all right? So in other words, cash now is worth more than cash in the future. Thus, inflation lets debtors pay lenders back with money that is worth less than it was when they originally borrowed it. All right, guys, kind of confusing the first time you read it, but basically what this is saying is during times of inflation, people that hold debt benefits the most. So student loan debt is a big example of this, guys. This is just one example. And I'm sure you guys have heard of the phrase, let's just inflate the debt away. So for any of you guys know, the US debt is so massive, guys. And you guys have heard a lot of people say, well, let's just inflate the debt away, print a lot of money. And that is what they're talking about here, guys. So if you hold debt and you believe that we are about to enter an inflationary economy, then it's gonna benefit you guys. So our only concern, guys, especially if we hold student loan debts like me, our only concern is, are we going to be in a deflationary economy in 2021 or 2022? And I personally believe not in the long term, guys. I believe over the span of the long term, we will be in an inflationary economy. We could be deflationary for a month or two. But overall, guys, I think we're going to finish the year on a positive inflation, guys. And why do I think that? So this next tab right here, guys, is the balance sheet of all the federal banks of the world. So you have the US, the Fed right here, you have the ECB, you have the BOJ, and then the People's Bank of China. And as you see, they all move in unison. Basically, all major central banks around the world are printing a lot of money, guys. And as you see here, just in 2020 alone, during the pandemic, we printed more money than we've had. And since the past 10 years, since the 2007, 2008, global financial crisis, we printed so much money in this time period alone, and the pandemic is not even over yet, guys. So I personally think that the global, especially the Fed balance sheet, we will definitely hit 15 or 20 trillion by the time this pandemic ends, maybe in 2021 or 2022. I do believe that, guys. So with that said, inflation will come later, guys. So for inflation to come, we need velocity to pick up. So just to keep it very simple, I don't want to bore you guys with boring macroeconomics, but for inflation, we need basically two major concepts. We need money supply, which is going on right now. Money in the world is being printed, and we also need velocity of money. So the reason right now, guys, why people are fearing deflation is because savings rate is the highest it's ever been in a long time. People like you and me are saving more money than we've ever saved in our lives. And even companies, Fortune 500 companies, major companies, guys, are putting cash on their balance sheets. Especially Warren Buffett, he has so much cash in his balance sheet. So that is the reason, guys, that we're not getting the inflation that we want in spite of the federal governments, the Federal Reserve, the central banks printing a lot of money, guys. So for us to get inflation, we need us and we need the companies to start spending this cash and dumping it into stocks, into gold, into Bitcoin, guys. And I think we will get that. We just need a little bit more time. That is one of the major reasons why I choose not to pay off my student loan debt, is because if this inflation comes, the interest rate we pay for student loan debt would be nothing. once we get inflation, and especially if you hold hard assets like I do, guys. All right, let's move on here. The next thing I want to show you guys is the average student loan interest. So the average student loan interest, guys, is only 5.8%. And honestly, that's quite high, guys, but we'll just use that as an example for this video. But I'll show you guys. So this right here is my personal student loan account. So as you see, guys, I have a couple of student loans. I owe $10,600 here with 3.4 interest, and I owe almost $6,000 here with 3.8 interest. So in terms of my interest rates, definitely lower than what this average says in Google. Oh, right here, what this average says in Google. So I'm definitely not sure why this is that high, but mine is definitely a lot lower than that. But we're gonna use the average of 5.8%. So basically, guys, the question is, can we beat 5.8% returns? If we can't beat 5.8% returns, guys, then might as well pay off student loan debt and not invest into the market. So I created here, guys, a chart of whether we should pay off our student loans or invest money into stocks, gold, Bitcoin, whatever, guys. So I took into account the tax rate after investing. So we would need an ROI of, let's say, more than 9% to break even, because I just put the student loan interest here of about 6%, 5.8. I just rounded to 6% just to be conservative. So we would need an ROI of 9% just to break even in regards to using our extra cash flow that we have from our paychecks and investing it into stocks, into gold, and things like that. So definitely, if we can get 9% returns, then yes, we should invest our money into other financial instruments rather than paying off debt. All right, guys, so let's move on. Again, I'm paying much lower interest than that, so my break-even point is definitely lower, but feel free to plug in whatever interest rates you guys are paying. And to be on the conservative side, if you guys have multiple student loan buckets, use the highest interest rate just to be on the conservative side when comparing ROI versus your student loan interest. All right, guys, so right here in this example, guys, we have the average performance of the S&P 500 over the span of 100 years, guys. So basically, over the span of 100 years, the S&P 500 has returned 10% year over year. So just looking at this calculator again, guys, if we plug in 10% and assuming a very, very aggressive tax rate of 30%, you would net out a 7% ROI. So you would definitely be better off investing your money into stocks rather than paying off your student loan debt. But for any of you guys that watch my videos, I am a contrarian investor. I like to invest in assets that have asymmetrical returns, guys. I like to invest in assets with the same downside as stocks, but very, very, very large upside. And things that I believe are asymmetrical are things like gold, silver, and cryptocurrencies, guys. So let's look at gold here, for example. So this is the long-term chart of gold. Let's zoom out actually, just so we can get the big picture. So as you guys see here, this right here is the 2011 high of gold. And I believe that we will breach this high at the very latest over the next decade. So within 10 years, we will breach this high, but I think that's quite long. I think it's gonna happen a lot sooner than that. So in my opinion, it's gonna happen sometime in 5 years, so maybe 2025, we will breach this high. So in 5 years, guys, if we breach this 2011 high with gold, you would have a return of 200%. Now, just to keep things simple, I know it's not the IRR percentage, but 200% divided by 5 years, that's about a 40% return ROI per year, but that's not IRR. So I'm just gonna say 30% from gold. So if you were to achieve that, guys, investing your money into gold, you would net out a 15% gain over paying off your student loan debt first. Now, what's even better is silver, guys. Let's look at silver and see how far are we from the 2011 high, which I believe we will breach in 2025. So silver, guys, we are 432% from the 2011 high, and I think we'll hit that in 5 years. So 432% divided by 5, that's about 86.4%. And again, that's not IRR, so I'm going to be conservative and just say that's 60%. for your ROI. So 60%, guys, for silver. If you were to invest into silver rather than paying off your student loans, you would definitely net out a 36% gain year over year on your interest rates. So definitely very, very good for silver investing rather than paying off your student loans. Now, for me, guys, I do have silver in my portfolio. I believe right now, I started off with silver being 5% of my portfolio, but now that Bitcoin and cryptocurrency is moving up, it's definitely becoming less and less. So silver definitely right now is less than 5% of my portfolio. And the remaining, that's non-cash, not including cash, the remaining is into cryptocurrency, especially Bitcoin and Ethereum. So why am I so obsessed with investing into Bitcoin, guys, rather than paying off my student loans? And that is because of the total market cap. So if you see here, guys, the total market cap of the whole cryptocurrency space is $402 billion. And Bitcoin alone is a market cap of $256 billion. Now, if we compare that to the stock market valuation globally, that's 90 trillion. So if you look at the cryptocurrency valuation, we're not even close to 90 trillion. So in terms of upside, guys, there's so much upside remaining into crypto. If you believe that crypto will change the world, so much upside. So that is why I choose to invest into crypto, especially Bitcoin. So with crypto, guys, I've already made a video on this, on what the ROIs of Bitcoin will be in the next couple of years, and that is going to be 300%. So for me, guys, if you choose to invest your money into Bitcoin rather than paying off your student loan debt, you would net out a 204% gain net year over year if you choose to invest your money into Bitcoin. Again, guys, this is not financial advice. This is only my opinion. Do your own research before doing something like this. All right, guys, so finally, I want to leave you guys with why I am so bullish with Bitcoin. Why am I so obsessed with Bitcoin, guys? Because I think that time is here. The time is coming. All these institutional investors are coming into our space. And, you know, back then, really, guys, Bitcoin was definitely purely speculation back then. And I think now in 2020, especially going into the next decade, between now and 2030, it's becoming more and more popular belief to call Bitcoin a store of value, guys. We're starting to compare Bitcoin to gold. And I'll give you guys an example here. I've already talked about this, but finally, MacroStrategy, as many of you guys know, who bought Bitcoin, used their cash reserves to buy Bitcoin. Finally, they released their 10Q recently. So I want to show you guys their 10Q real quick before we end the video. So right here, guys, MicroStrategy as of June 30, 2020. June 30, 2020, they had 420 million in cash, right, guys? And they told us in their subsequent events down in this financial statements that they were going to invest into Bitcoin. And I wanted to see that for sure reflected in their financial statements. So finally, guys, a few days ago, they released their third quarter 10Q. Again, guys, you guys can watch my old videos on how to pull something like this up. But guys, look at this. So this is really amazing. Digital assets. So digital assets, they have 380 million. And look at their cash. Now, in the third quarter, as of September 30, 2020, they have 52 million in cash remaining. And look, so basically, in Q2, they had 420 million in cash. In Q3, they had 52 million in cash. So where did the cash go? They took the cash and invested it into Bitcoin. Now, I wish they would have called this a Bitcoin instead of digital assets, but that's fine. It's a more broad term. But I wanted to show you guys something here that is really cool. Right here, guys. So Bitcoin held by us, with Bitcoin serving as the primary treasury reserve asset on an ongoing basis, subject to market conditions, guys. So that is really amazing, guys. Just this line in the financial statements, which auditors, prestigious auditors reviewed, guys. That line right there is amazing. So what that line is telling me is companies like MicroStrategy are definitely believing that Bitcoin is going to be just like gold. People invest in gold to store wealth, to store value. And just to have this line, guys, in the financial statements, definitely very cute, guys. And MicroStrategy is only the beginning, guys. Before we know it, give it 2 years. Give it 2 years, you're gonna see so many companies in the news invest into Bitcoin and add lines like this in their financial statements, stating that Bitcoin is a reserve, an asset reserve. So very amazing, guys. I think it's only the beginning. So that is why, guys, I choose to invest into Bitcoin so much, for any of you guys that watch my videos. But anyway, guys, so that is my opinion on why I choose not to pay off my student loan debt and instead invest my money into Bitcoin, because I would never achieve my goal of financial retirement in a few years if I invested into student loans. I would never, because of Bitcoin, guys, I have a realistic goal of retiring in less than 5 years. And I think 5 years is a bit conservative. It's probably gonna be a lot sooner than that, depending on when Bitcoin and cryptocurrencies top out. So basically, whenever Bitcoin tops out, that's probably when I retire. I'm assuming sometime in late 2022 or maybe early 2023 at the latest, guys. So that it's like 3 years basically. But I'm giving myself 5 years because better early. If it happens earlier, better for me. But I'm telling myself 5 years just so I don't get my hopes up too fast, guys. But anyway, guys, I definitely thank you guys for all your support. That all my current subscribers right now, you guys are the OGs. Once I reach 1,000 subscribers, I definitely will remember you guys, especially for you guys that comment on my videos down below. I'll definitely remember you guys. You guys are the OGs, the pre-1,000 subscribers of Project Influencers. Definitely appreciate you guys, my true OGs. All right, guys, I'm going to leave it as that, and I hope you enjoyed the video, and I'll see you guys next time.